Who's with us on this momentous day? Elizabeth McDonald, Brian Bremberg, and yes, Scott Martin right there. Scott, to you first. What do you expect? I'm going to start with later today. Amazon, Google, Microsoft. Extremely important earnings. What are you expecting?
Good things, Stuart. You know, if you look at the market's performance this year, it's been due to a lot of the big tech companies that you mentioned, especially the Googles, the Amazons, the Microsofts, Facebook and Apple, by the way, we have next week. So this is kind of like the first meal, let's say, of the big meal that we have next week. So this is a good indicator of how tech is going to perform here in this quarter's earnings. But I'll tell you what. Given the fact that the stock performance has been so good this year, we've had really good earnings the previous quarters. I'm expecting more of the same. And if you have a chance, say before the end of the day today, if you're looking to add to these positions, I would do so. You would do so. That's interesting.
Lizzie, you say that the big techs have been down just a little in recent sessions.
Last 6 of the 7 sessions. But, you know, operating earnings are up quarter to quarter, 8.5%. They're looking at that number, and the expectation is about 7. So they're coming in sweet.
Yeah,
you know?
Looks like
for the broader market.
And those stocks are up this morning before we get the official numbers.
Is correct.
That's important. Okay, 2 different forecasts for the stock market. Number 1, J.P. Morgan analyst David Kelly says he expects a rough time ahead for investors. That's what he says. But there's a new survey from the Center for Audit Quality shows 85% of investors are confident in the market. They think the economy is growing. They're confident in President Trump's growth agenda. Brian, you stand firmly with them on that.
I'm with the 85%. Look, the worldwide economy is strong, getting better, and you have tax reform that looks like it's getting momentum. That's going to push things ahead in the year.
Okay, we are up 106 points on the Dow Jones average. That puts us at 23,436. Up 109 points as we speak. How about that? I think the market believes we'll get a yes on the budget. That's what I'm thinking. How about General Electric? Morgan Stanley announced, now this was yesterday, they're taking GE away and out of their dividend portfolio fund because the dividend is threatened. So come on in, Scott Martin, $21.50 on GE. Would you buy it?
No, I'm not touching this one, not even with your money, Stuart, even though I know you like stuff like People's Express, so let's stay away from this one, too. I'll tell you, that's one of my favorite memories, by the way. But look, you know what's interesting is, here's the thing, the sentiment on GE is getting there. Let me put it this way, you know, being an investor and as we invest client money, one of the things we do look at is sentiment. And eventually things are going to get so bad on GE, they're good. The problem is they need to go through some of the company breakup talk. They need to get past this dividend concern before things kind of wash out. But GE, say, below 20, which, by the way, I think it's going to get there. That might be the buy point.
For the average investor who's investing for the long term, GE at 21, in my opinion, looks good. What am I missing?
It could go down further if it cuts that dividend on November 13th. Stay with me on this, because this has been a go-nowhere stock for the last 20 years. If they cut the dividend, you got to wonder if the Dow committee at Dow Jones kicks GE out of the Dow 30 stocks and puts in a Honeywell or Amazon, because that could push easily the Dow toward 24,000. I mean, they are a bellwether stock that's indicative of the broader capital markets sector. So is there justification for keeping GE in the Dow if it cuts its dividend? If it does that, it goes down.
I'll take you as a no on buying GE at 21.50. But I'm a yes, actually. I would. Check that big board. It's worth checking. We're up 108, 109 points as we speak. 23,436. All of yesterday's loss wiped out in the first 5 minutes of business. I've got 3 major airlines reporting profits this morning. All of them did pretty well. American, Spirit, Southwest, all of them on the upside. Nicely so, too. Look at that. Spirit is up, what? I'm squinting. 9% higher. Not bad. Dunkin' Brands, they own Dunkin' Donuts, of course. Sales up 2%. Not good enough. The stock is down 2%. Better sales of candy. That's boosting Hershey, or it was. Now the market is open and the stock is down 1.5%. Strong pickup truck sales giving Ford a modest lift. Well, not too bad. Up nearly 2% on Ford, 12.26. And the company has raised its outlook as well. That helps. UPS says profits hurt by the hurricanes, virtually flat, down 90-odd cents at $117. Mixed picture for big media companies. Time Warner is up a bit, Comcast is down a bit, and Charter Communications down big time, 7%. Hard times for a lot of them with cord cutting. That's the story there. The FCC planning to change media ownership rules next month. Expected to get rid of limits on local ownership of TV stations and newspapers. Anything more on this?
Well, it's going to be a landmark move, right? Because this is a 70 errors law that was about diversity of opinion and diversity of ownership. And we still had the big networks growing even stronger. And so will this, getting rid of this, what will it do to local TV markets and media markets? It's a big deal. It have a big impact across the country.
Yeah, you think
I say good riddance.
Yes, do it.
The market is so much more competitive. This is 1970s stuff. Goodbye.
Grow up and do it.
Social media.
Compete. What's wrong with
right?
that? Okay, now we're up 100 points for the Dow Industrials, and we've got Microsoft. Usually we get trumpets for this in my honor. Okay. Microsoft is at 79.23. I think that's an all-time high. I can't remember it getting above that level. That's an all-time high, 79.25. Now, Chipotle. Whoa, crushed this week after reporting much lower profits. And investors, they're betting that Chipotle shares would fall I'm not sure, what's this about? Somebody shorted the thing and made $260 million. Is that it? I'm not sure of this. Okay, Scott, would you buy Chipotle at $277?
No, I wouldn't, and you're right. You know, Chipotle's been a really, I guess, good stock to short, which is basically a bet you make to have the stock go down, and that's been the right call. You know, retail as far as restaurants is really tough. You know, the consumer changes their tastes often. They're very price competitive. Margins aren't great. So when you're looking at things like Chipotle, I think you got to be real careful. You know, these are more, in my opinion, a trade versus a long-term own, and Chipotle is not one I would put on my plate.
Help me out, Lizzie.
Sure.
What's
so the stock went down after earnings, and those who were betting that it would go down made $261 million. All those guys who bet against the stock, they made $261 million. This is the most heavily shorted stock in the restaurant sector. And the fast casual is, to Scott's point, is under duress. It is the most heavily sorted sector in the restaurant market.
All right, fair point. Got it. Lowe's is going to start selling Craftsman power tools and other products starting next year. Craftsman was a Sears brand for more than 90 years. Another blow to Sears. Looks like that to me there, Scott.
Yeah, it sure is. You know, Sears can't really catch a break, can they? And I mean, we talk about retail all the time and the trouble that Sears and some of these other ones, JCPenney, another one of our favorites or not so favorites, you know, these companies are really getting hit hard. I'll tell you what's interesting, though. If you think about the home improvement space, you look at companies like Home Depot and Lowe's that are actually making it. Those are places I would focus investment dollars if you're absolutely concentrating on retail, not some of the Sears and JCPenney's of the world.
Yeah, fair point. Now we've got Regal Entertainment. That is the second largest movie theater chain in the country. Regal Entertainment plans to test out a new pricing strategy next year. It's going to allow customers to pay less for flops and more for big hits. What?
Well, why else would you go to flop? I'll pay you $1, I'll go to the flop movie. That's okay, fine for Regal Cinemas. They need to put people in seats. They put a person in a seat one more time a year. It makes a big difference for them. But that's why they want to do this.
I get very excited about these things.
Drama.
But isn't this
movies?
Finally the free market coming to Hollywood saying, Hollywood, this is a wake-up call to you. Quit churning out the flops because we ain't paying for them. So they got to get on the stick here, right? This is a shout-out to Hollywood about its business model.
Well, the investors like it. The stock's up, what, 3% there? That's okay. Not bad. Not bad.
Technology is what allows you to do this, by the way. This is why Regal can do this, because they can actually price this dynamic.
Look, I would pay a much lower ticket price to go and see a movie which other people didn't like.
Don't you already do that at 1 in the afternoon when you like to go?
He's the matinee guy.
He's the matinee, the early bird special guy.
And you know what? I go to these matinees and the early bird specials, and I'm the youngest guy there. It's really something, I'm telling you.
Reclining seats, take his nap.
Stop laughing, Scott Martin, because your time is up, okay? And you, Brian.
I'm out of here, man. I got a matinee to go to. Come on.
And a burrito.
We're all going to be there. By the way, the three of us are going to be joining you in about 10 years.
I can go to a movie at 11 o'clock in the morning and pay $5, and I think that's a bargain, and I like it.
That is good.
Enough.
Good tip.
Goodbye to both of you gentlemen. Thank you very much. Check that big board.